Hey folks, we're recording at the Injective Policy Summit in Washington, D.C. Joining me is Max Bareiss, who's the head of lending at Galaxy. Max, great to have you.
Thanks for having me, Tony.
Max, excited to chat to learn about the institutional adoption of crypto that you guys, what trends that you're seeing on your end. I would love to start with your background. Where are you from and how'd you make your way into crypto?
Where am I from? I am from Chicago, Illinois. I grew up there, went to school at the University of Texas, moved back to Chicago, moved to New York in 2020. I've been with Galaxy now 4.5 years. Been in crypto since 2019. I was at Deloitte prior to joining Galaxy. Galaxy was a client of mine. It was sort of the natural progression to move over there because I was enjoying digital assets a lot more than what I was doing on the tax consulting side, and moved over and took the full plunge into digital assets in February of 2022.
So Galaxy offers crypto lending to institutions. What are some trends that you're seeing, especially during this bear market time?
Yeah, during the bear market time, one of our hottest products has been the collar loan. You can sell a call and buy a put and get 0% APR financing. There's no margining on it. It's a non-recourse loan because you have the put protection. That's been one of the most popular products during the bear market because it allows for you to have that downside protection. You don't have to worry about the margin calls. We also have done a couple new product launches this week that I think it's worth talking about because it's topical. We launched the Galaxy on-chain financing rate. We're calling it Gopher, which is a play on SOFR. Yeah. It allows for institutions or high net worth individuals to access DeFi without having to go directly to DeFi. You can take your crypto, whether it's Bitcoin, ETH, or whatever. You can post native Bitcoin directly to us. We'll go through the operational process of wrapping the Bitcoin on your behalf. And then we go to the DeFi protocols. Right now, we're live with Aave, Morpho, Spark, and Camino, where we then take the wrapped Bitcoin, post it to any of those 4 protocols that I mentioned, and we send back stable coins at a blended rate based on the weighted average that we're borrowing from the different protocols. That plus we also just closed a $500 million warehouse facility with Grove, which is a part of the Sky ecosystem that will allow for us to really ramp up our lending activities in the non-rehypothecated segment of the lending market. So really trying to attack both vectors of the different opportunity sets out there, depending on counterparties, what they want to do from a risk standpoint, and then also trying to optimize for some of the complexities that people face with on-chain and DeFi protocols today.
That's really great. I'm a big believer in DeFi. I believe it's certainly the future. However, it feels like we're in version 1.0 of DeFi where there's still some exploits. Are the institutions, how are they feeling about those things? Are they it doesn't make it hesitant that how much capital they put in and things like that?
I think there's a decent amount of hesitancy, especially with the adoption of AI. I think one of the way I'm looking at it is a little bit different. I feel like right now on-chain and DeFi is being pen tested because people have access to it right away. And so you have these honeypots across all the different places across all of DeFi and on-chain where it's getting tested in real time. And I think it's actually getting hardened in real time. You saw as some of these AI models were coming out earlier this year, you had a lot of those exploits. I think there's a lot of institutions who took note of that and have definitely taken a step back. But I also think this is exactly why somebody like a Galaxy bringing some of these products to light, because we have thought through a lot of the different security measures, a lot of the risk measures, putting ourselves in a position to trade the risk, make sure we're in the room to utilize on-chain, because like you said, I'm also a huge believer in DeFi.
Now, from a regulation standpoint, we know the Clarity Act is at the cusp of being passed, but it's more of a macro bill that just solidifies the rules that have been put out by the agencies like the SEC and much more. Are there rules in place for crypto lending, or are we still waiting for that?
I think crypto lending for the most part is pretty commoditized. I feel like there's a lot of the information I already need out there where I don't know if Clarity is really going to change my business much. other than the fact that I do think it's going to be a great thing for the industry as a whole. And as the industry as a whole gets larger, that obviously helps me grow my book. It helps bring in new liquidity pockets. It allows for institutions to come in with different sources of capital. You can start to see things like duration trades. I think we'll start to pick up post Clarity because there's going to be liquidity curves as TradFi comes in. Those are some of the things that I'm looking at with Clarity, and probably some of the things I'm most interested in over the next 2-3 years.
What type of institutions are using your crypto lending services? Is it family offices, hedge funds, banks, things like that?
Yes, it's
Wow.
it's anybody with crypto.
Okay.
Every single person could be a client of ours. I think it's if you have any digital asset, you're looking to get leverage against it. We're looking to underwrite what the assets are. We take risk practices pretty seriously, so don't take in an asset more than 10% of the average daily trading volume of an asset, but we do look at all different digital assets across the ecosystem. That allows for, if there's an event, and let's say it's $100 million of average daily trading volume, the most amount of that asset we would take is $10 million, but then we would take a LTV on it. So maybe we're lending at a 40 LTV against something that's a little bit more taily if it's only got $100 million of average daily trading volume. But I think I want to make sure that every single person can come to us and we can help them out and help them with any kind of financing situation they're looking for in digital assets. That's exactly what we do. And that's exactly the type of business we run.
And the assets that you provide lending on, is it like the top assets by market cap, let's say the top 15 or 20? Obviously, Bitcoin, the easiest, most liquid, ETH in a second, but are you branching out to like altcoins and things like that?
I would say Bitcoin, ETH, and Solana make up 99% of what we do, but I don't think that that necessarily needs to be the case. It's just that's where you have all of the market cap.
Sure. Maybe over time, as let's say Clarity Act passes, the ecosystem grows even more. Certainly more coins will grow in market cap and liquidity.
Yeah. And I think there's more than lending dollars against the different digital assets. You could lend digital assets against digital assets, people taking directional views on things. They could be borrowing something like a Bitcoin to take a directional view where you could sell it and buy Ethereum, so you could trade that cross. There's a lot of different things that you can do within the lending market.
Rookie question. When someone is lending or borrowing against their crypto assets, is it just like getting a loan from the bank where there's a fixed term and a certain rate and things like that?
No, that's not a rookie question. I think that it really depends. And so we have a lot of white glove solutions where we come to counterparties, we try and help them out, try and understand what they're looking for. We can do fixed rate, fixed term. That's definitely something we can do with the Galaxy on-chain financing rate. That's more of a reflection of the real cost of capital in crypto at a certain time. So it does float with the on-chain rates that you're seeing across those protocols that I mentioned earlier. And then one of the things that has been incredibly popular, just given sort of liquidity profiles, is a 30-day evergreen loan where it stays open in perpetuity forever with a 30-day recall that's symmetrical for borrower and lender. So we've had some of those out there for 3-4 years now. Wow. Where it just stays open at 30 days. And then if either side wants to recall, then it's 30 days to completion. And so that allows for a really good smoothing in terms of your asset liability planning. So you can always make sure that you have access to that liquidity on the borrow side for 30 days, which is much cheaper than borrowing for a year out or something to that effect.
Very interesting. I have crypto assets. I need to talk to you guys about how I can do that.
We can talk after this.
For sure. What is your outlook on the crypto market? It seems like we're nearing a bottom. If the bottom's not in already, do you anticipate later this year the market would be maybe in a bull uptrend, that type of thing?
I'm an eternal optimist, so I've constantly been thinking the bottom's in. I still think the bottom's in. I think that we're primed for growth. I think that I'm more asking who's selling, because why would anybody be selling at these levels? I have such a strong outlook on digital assets. But I mean, I'm also running a lending desk. I'm not a trader, so right. I don't really take directional risk. Sure. For Galaxy, I have a little bit in my PA, but yeah, I'm definitely bullish.
Yeah, and we talked about the Clarity Act. Hopefully that passes. When it does pass, what impact will that have on the crypto industry and even Galaxy's business?
I think it helps grow the digital economy, the digital asset economy. You're going to have so many more institutions and people who maybe have been sidelined because they're waiting for regulation to come in. And then once that comes in, you're going to start to see the boom of everybody coming back into digital assets, trying to make sure that they understand the blockchain rails, because there's a lot of things that could be better if you just actually use the blockchain rails as opposed to what we have as the historical rails for a lot of the securities that are trading today.
So Max, there's a race to tokenize assets. You have stock exchanges, the biggest investment firms on Wall Street doing this. Is it too early maybe to ask this question? Are any of them looking to do any type of lending or borrowing off of tokenized assets?
It's definitely a hot topic.
Okay.
I have had a number of conversations about it. That's probably where regulation helps the most, because it really comes down to the operational process. It's great when you have a tokenized equity, for example, but you need to be able to, if you're taking it as collateral, sell it if somebody misses a margin call. And that's one of the things that's incredibly complex, because you need there to be a liquidity Saturday, Sunday, holidays, nights, weekends, etc., before that market really takes off. And I don't think we're that far away from it, but we do need some of those things like you mentioned, some of the large exchanges to actually have that 24/7 trading for those tokenized assets when you're going to start to see something like that really take off. I will also say that you're going to get with clarity the distinction between digital asset commodities and digital asset securities. And with that, you need to make sure that you have the proper licensure to take those assets and be able to lend those assets or lend against those assets or do whatever you need to. If it's better to do it as a swap, making sure that you're a securities-based swap dealer, for example. There's a lot of different ways to finance some of these assets, and just making sure that you're in a position to do it. It takes a lot of the legwork up front to make sure that you can be in a position to capitalize on that when people are ready to go.
Yeah, because in initial phase of rolling this all out and building the infrastructure, you're going to have two markets: the tokenized version of a Tesla stock and a analog, if you want to call it that version, right? The traditional way of this. And how do you avoid, imbalance with liquidity? And one can trade 24/7 on the weekend. Something happens on a Friday evening and I can do the test.
I think there's a ton of opportunity there.
Yeah.
And in taking lending aside, from a trading arbitrage standpoint, you're going to start to see some of the big time players come in, make sure that they have the operational rails set up. And if there's ever a discrepancy between the two, you can make a lot of money just making sure that you can capitalize on that arbitrage. And I think that you're going to start to see that.
Well, hopefully, I know the SEC is working on tokenized guidance, and they come out with something that helps avoid any issues, I should say. Not with the arbitrage, but rather mispricing and all kinds of things that happen there, What's on your roadmap that you can share?
Well, the two products that I mentioned, those have taken up a ton of time and effort. Mm-hmm. And so very proud of those. I think right now, making sure people understand that these products are out there and trying to get as many people in the door as possible to start trading some of these products. I think looking forward, some of the things that we're looking to do, interested in the private credit space, the RWA space, thinking about ways of putting debt on chain. So tokenized debt is something that I'm incredibly interested in. I know everybody talks about tokenized equities because that's something that's pretty easy and simple to understand, and that's not as interesting or maybe as sexy as something like an equity. But I do think that it's sort of the natural evolution. You talk about stable coins first, then you saw tokenized treasuries, tokenized money market funds. The next evolution is bona fide tokenized debt. And then I think we're going to see tokenized equities as sort of the fast follow after that.
What about tokenized deposits? They're kind of along the lines of stablecoins, but a bit different, maybe more on the commercial side. Would that be something you'd be involved, or that's more in the banking ecosystem?
I think that's a topic in clarity. I think that it doesn't necessarily touch my desk as much. I think that's probably more our tokenization group that we have at the firm and or our treasury function and or our asset management function. I do have a lens into everything that we do from like a treasury standpoint. However, that's not really my remit, but I do think it's a super interesting topic. And I think that that is one of the things that clarity will actually allow us to understand more about how that's supposed to be treated and how you can design the products around that.
Yeah, that absolutely makes sense. Well, Max, thank you so much for taking the time. Looking forward to our next interview as we dive into the latest and greatest around Galaxy. Thank you so much for taking the time.
Appreciate it.
This episode is brought to you by Go Mining. Go Mining is the all-in-one Bitcoin app that makes it simple and secure to earn, use, and benefit from Bitcoin every day. Bitcoin is the future of money, and Go Mining brings the future into the present, regardless of your country, income, or level of knowledge. The app brings together a growing ecosystem of Bitcoin products. This, of course, includes mining, which is the core of Go Mining's business. Traditional Bitcoin mining usually requires buying expensive equipment, managing electricity and maintenance, and setting up technical infrastructure. Go Mining removes this complexity. Instead of running hardware at home, users can access real mining infrastructure located in professional data centers through the app. Now, it's important to distinguish that Go Mining is not a cloud mining app. All mining power is backed by real equipment in their data centers, and you can verify this yourself directly in the app. They also offer what's called mining wars. So this is a competitive mining game where users can battle for greater rewards. So it gives you another option to be able to earn and makes it a bit fun as well. In addition, they offer a great crypto wallet, a built-in crypto wallet to store, deposit, withdraw, and convert supported assets directly in the app. And it's easy to manage your Go Mining initiatives within their dashboard where you can view your rewards and all the mining activities that are taking place. And they also have a great academy that helps you to get started and answers all your questions with courses, guidelines, and much, much more. So you have to check out Go Mining. Go to the link in the description to learn more. Thank you so much for tuning in. Please hit the like button, subscribe if you haven't as yet. If you're listening on a podcast platform such as Spotify or Apple, please follow and leave a 5-star rating. Thank you so much.